Hey, my name is James Nicholson and welcome to my YouTube channel. If you are a landlord or a self-employed person, you're going to want to watch this video because there's some major tax changes happening in April of 2026. So not that long really, less than a year to go. So you need to understand what they are. And unfortunately, it's not good news. There's going to be significantly more work involved in doing your tax return, more frequent tax returns as well. And a lot of landlords are expected to get caught out on this because they don't have an understanding on what HMRC is looking for. And I'm going to cover that in this video. So if you're new around here and you haven't done already, please do subscribe to the channel over there and hit that bell notification. We've got new property content every single day. We talk house prices, we talk interest rates, we talk property investing and much, much more. And let's get some views on this video by smashing like, tickling like, doing something to the like button. That really helps with the YouTube algorithm and has really helped the channel get to where it is today. So thanks to everyone that takes a moment to do that. So HMRC, they're making tax digital from 2026. And this is going to have a big implication for self-employed people who currently right now do their returns on an annual basis, and there's a big delay in when that happens as well. So this is going to bring forward a lot of reporting. You're probably going to need your accountant to check stuff. So accountants are going to be loving this because they're going to get more frequent work from the self-employed people that they maybe see just once a year at the moment. And so here's what we're talking about here. So this is coming from HMRC. It's been announced a while ago, but a lot of landlords have missed this. And that's why I wanted to go a little bit more detailed into it so you can really understand what is going on. So key dates. This starts on the 6th of April 26. So not long, less than a year to go. And you can enroll early if you want. I don't know why you'd want to do that because it's going to be more work. Maybe you just want to get used to it and they're a little bit more forgiving. But ultimately, with anything with HMRC, if you don't get on top of this, you're going to get penalties for being late filing and stuff like that. Now, the first year, they might be a little bit fairer on that, but often this will get quite strict quite quickly. And they want to know what's going on with people's businesses a lot sooner. So what is the criteria? Well, in the first year, you've got to have 50k or more as your income. Now, here's where a lot of landlords aren't understanding this. A lot of landlords feel this is the net rent. It's not. It's the gross rent before any deductions. So a lot more people are going to fall into this category than are expecting to happen. So right now, it is for the gross rent. That's very important to understand. So if you get £2,000 rent, then before any deductions, that's included in the total towards this 50 grand. So that's very important that people understand that. And that makes a lot more people fall into this criteria of having to start doing this on a quarterly basis. So how many people are going to fall into this? Well, in the first year, so year one, it's going to hit 780,000, a little zero in there, 780,000 small business self-employed landlords are going to fall into this criteria that you've got to do the reporting. Look, I know that the landlord market is shrinking or not really growing at the moment. You've got the EPCs, you've got the Section 24, you've got the Renters' Rights Bill going through Parliament at blazing speed at the moment. And this could be another straw that breaks the camel's back for some landlords. The fact that you've got to keep doing more and more tax returns is going to be very frustrating for a lot of people. So 780,000 people are going to hit this in year one. The next year, year two, they're dropping this. So in 2027, this drops. And another, basically 1 million people are going to fall into this. Now, in year two, this drops from 50 grand a year down to just 30k a year. So pretty much most people. And remember, if you're self-employed, this will take into impact your income. Maybe you're a plumber, a builder, I don't know, whatever you do, and your rent combined. So it's going to be quite easy to hit that 30 grand, which is by year 2, you're at nearly 2 million people, landlords and self-employed people, that are going to have to do quarterly tax returns. This is not going to be fun at all, but it gets worse. So in year 3, it drops again. And so year 3, they don't say how many additional people this is going to impact here, but it's going to be dropping to just 20 grand. I mean, for people, landlords in London, that's just one property. Or you could be self-employed working part-time and also have one property as well. This is going to encompass a lot of people, and I don't think many people are aware of this. I'll be honest, I wasn't massively aware of this. I speak to my accountant about 3 times a year because I've got a few businesses that she works on, and we talked about that in our last meeting. But a lot of people, but prior to that, I didn't really understand that this was coming through, if I'm totally honest. And this is going to be something that the government has as an extra thing to just collect more tax revenue faster from self-employed people, and to get more accurate data, and just to check people aren't like cheating on their tax returns and stuff like that. So this is something that you've got to consider and take into account in your property investing journey. It is something that you can't avoid. It does mean that a lot of landlords are going to fall into this. Now, does this cover limited companies? Not necessarily. So if you invest just in a limited company, you would still do your annual tax return, but eventually that will be quarterly digital tax returns as well. It's going to be for businesses as well, but it's going to be slightly different on how that works as well. So look, this isn't great news in my opinion. Anytime the government are just making things harder and more work, it's frustrating. I totally understand that. The only winner I can really see out of this one is accountants, who are going to get a lot more fees, going to get a lot busier with a lot of additional work for their self-employed clients. What do you think about this turning tax digital? It means they're going to collect more revenue, I think, and I think they'll get the revenue in faster, which will improve government cash flow. But it never really touches the big corporations, does it? You're never going to get Starbucks paying more tax or Amazon paying more tax. It's always the small independent business owners and the employed people that always have the burden of the bigger tax thing. Let me know in the comments what you think below. Do you think this is something that could get reversed? I don't think so. I think this is nailed on, and this is likely to be rolled out very, very quickly. Do make sure you like the video, subscribe, share this with a landlord that you know, and do check out all the other content as well on the channel, including this video right here.